In this video, I'm going to show you what the average personal debt of a 55-year-old's several different ways. Coming up next on Holy Schmidt.
Holy Schmidt!
We all like to know how we benchmark against other people. There are several reasons for this. Advertisers that tell us that we're too heavy or too thin. Mutual fund companies that tell us that we don't have enough saved for retirement. Friends and family that tell us we should take Social Security early because we could all die tomorrow. Others tell us that we should take it late because we want to make sure that we have enough saved for retirement in our golden years, or our olden years as the case may be. And of course, there are a lot of opinions about debt. Debt can be bad if you're talking about credit card debt, or it can be good if you're talking about mortgage debt or business debt, but not too much mortgage debt or business debt. Too much mortgage debt, for example, means that you're overextended. 10 years ago, that would have been a good thing because you were going to grow into your mortgage in your house and your income was going only up. But things didn't turn out that way for a lot of people over the last decade. In other words, conflicting messages are everywhere. By the way, before we continue, please make sure you click subscribe and notifications so that you get alerted the next time I post a video. I post about twice a week. Now back to the video. So why does someone want to know what the average debt of a 55-year-old is? The big reason is that more and more people are entering retirement with debt, and they've been told to pay down their mortgage, pay off their credit cards, and cancel their personal loans. Directionally, not bad advice, but there are reasons, maybe even really good reasons, why someone should have debt at 55 years old, depending on their station in life. So what does the average personal debt profile look like for a 55-year-old? In order to answer that question, let's talk about the big 5 personal debt categories. Also, don't forget to click the like button. YouTube uses the number of likes in a video to drive a video up in the search results, and I want to help as many people as possible. Category number 1 is your car payment, and this number varies wildly because most of you at age 55 would have enough credit to go out and buy a Porsche, or you could go out and buy a Honda, and both would be 3-figure payments. The difference is the 3-figure payment on the Porsche will probably start with a 7, 8, or a 9, and the 3-figure payment on the Honda would start with a 1 or a 2. The next category is one that most people know quite well, and that's credit card payments. I call credit cards the silent killer because the debt sneaks up on you one purchase at a time. And before you know it, you're over your head. Often this happens when someone says, I'm going to use my tax return, my bonus, or next week's check to pay off this charge. It's really important that I buy this now. But when next week comes around, they don't pay it off. Repeat this 3 or 4 times and you have a big, ugly credit card balance. Category 3 is your mortgage payment. This includes a home equity line of credit, often called a HELOC, and your traditional mortgage, usually a 30-year fixed rate payment. HELOCs are harder to get today because people were using them as ATMs back in the early 2000s when house prices kept going up and up. The mortgage companies decided that wasn't a good idea. But someone who's in their 50s probably still has one or had one available to them, and so it's included in this analysis. Category 4 is student loan debt. Like mortgage debt, student loan debt is often considered good debt, and there's a reason for this. If you read my book, The Busy Adult's Guide to Making College Happen, people with a college degree earn on average 70% more than people without a college degree. So it's a pretty good investment, depending on what degree you get. 70% is an average. If you have a finance degree, the number might be higher. If you have a degree in philosophy, the number is probably a bit lower. And then there's the other category. This is the catch-all category that doesn't have a home in the other categories. It's usually something like a grill where the manufacturer finances that grill for you, or a home sprinkler system that's paid off over 6 or 12 months, perhaps even something like a timeshare. So where does an average 55-year-old sit in each of these categories? Well, it's a little bit complicated because debt sits at the household level in most cases and not at the individual level. What I mean by that is that a couple often has debt that they share together, mortgage debt, credit card debt, for example. Oftentimes that amount is not one person's debt, but it's the obligation of both people. So the numbers that I'm going to give you reflect the average debt of a 55-year-old and that person's household. By the way, this information comes from the 2018 U.S. Census Bureau report. The information is pretty accurate. It might be off by a percentage point or two, but not by much. First, let's talk about overall debt of a 55-year-old. At age 55, the average overall debt is $69,215. This is comprised of automotive debt of $5,739. This is debt on one or more vehicles in the household. Credit card debt of $4,480. Like automotive debt, this may be more than one credit card depending on the number of credit cards that are being used. Mortgage debt of $52,934. This is subdivided into a primary mortgage of $49,875 and a home equity line of credit of $3,059. The next category is student loan debt. This number is $3,962. At age 55, this number will be running down to zero pretty quickly at this point. Finally, other debt of $2,100. This is the miscellaneous category that I talked about before. For most people at age 55, $69,215 is a lot of debt, especially when you consider the minimum payments needed to service that debt. But for most people, they have another 10 years to get their debt down to the magic number of zero, and by focusing on paying more than just the minimums, a lot of people are quite successful in achieving a zero balance at age 65. I'll recommend one of my videos at the end on how to obliterate debt. It's called How to Obliterate Debt in Retirement. The lessons are equally applicable whether you're 50 or 60 or 70, and they're also applicable if you're 20 or 30. By the way, if you were looking at these same numbers for someone in their 40s, the balances would be about 10% higher, and for someone in their 60s, the balances would be about 10% lower using the U.S. Census Bureau data. So the average person does not work it down to zero by age 65, unfortunately. But with a little work and focus over the next 10 years, you can get there and live a debt-free retirement. If you like this video, please don't forget to give it a thumbs up, and don't forget to click subscribe notifications so that you get alerted the next time I post a video. I post about twice a week. Also, as I mentioned a few minutes ago, don't forget to check out this video on how to obliterate debt in your retirement. It works equally as well for someone in their mid-50s. This is Geoff Schmidt. Thanks for watching.